sir.
Right, okay.
Good afternoon, ladies and gentlemen. A very warm welcome to another virtual seminar organized by the Seminars and Conference Committee and the Taxation Committee of the Institute of Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka, incorporated by an Act of Parliament. CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuing professional development CPD programs for its members and students at no cost. The knowledge sharing session on the budget highlights 2025, its impact on the business, economy, and society. This is the second session on the budget due to the several requests from several stakeholders subsequent to the successful physical session.
We can't hear you. You're muted. Yeah.
Can you hear me now, sir?
Yeah, okay.
Good afternoon, ladies and gentlemen. A very warm welcome to another virtual seminar organized by the Seminars and Conference Committee and Taxation Committee of the Institute of Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka, incorporated by an Act of Parliament. CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuing professional development CPD programs for its members and students at no cost. The knowledge sharing session on the budget highlights 2025, its impact on business, economy, and society. This is the second session on the budget due to the several requests from several stakeholders subsequent to the successful physical seminar we had last week. To commence the program, I have the pleasure in inviting Professor Lakshman R. Vattavala, Founder President, CMA Sri Lanka, to deliver the welcome address and the introductory to the today's topic. Over to you, sir.
Thank you very much, Mr. Gajendran. We have our council members, our Vice President, Mr. Hennayaka Bandara. Then also we have one of our other council members also, the Senior Professor Kennedy Gunawadna, and the other members who are there. And our members who are speaking today, and also the panelists. Today we are very happy to organize this webinar, because we have been doing this regularly, and we find that today there have been almost about 750 registrations. I think the numbers are still joining, but we thought that we will start due to the short time period that we have to conduct this webinar. So I must thank all our eminent speakers, especially Mr. Duminda Hulangamua, who's really accepted the invitation and agreed to speak to us. And he's, of course, closely involved, I'm sure, with the budget preparation. So he will be able to give a budget overview, which might help us in really finding out what contribution we can make from our side. Then, of course, Mr. Atula Ranavira will be speaking on the tax proposals that are there. And Mr. Gajendran, as usual, will look at the impacts. And we will also be discussing on the motor vehicle tax, and of course the tax appeals commission, tax appeals commission matters by Ms. Samin Tilakaratna, who is the partner tax of Deloitte. So then we also have a very maybe a forceful and maybe useful panel. As I said, Senior Professor Kennedy Gunawadna, the head of the Department of Accounting of the Sri Jawaharlal University, Senior Professor Buddhi Marabe, who is from the Peradeniya University, and also in the agriculture area, Mr. Jehan Perimpanayagam, who is from the Informate, and also two representatives from the audit firms, Ms. Radhini Thomas from KPMG, and Mr. Saktivel from Ernst & Young, and our Vice President, as I said, Mr. Hennayaka Bandara. will be giving the concluding remarks. Now, one of the most important things is that today the budget is there, and while we are speaking on this, the implementation area is also very important. But before that, I just want to take up one important matter that is, I think, that was mentioned by the Honorable President about at the start. One, of course, the corruption that has to be eliminated, and the other one, of course, irresponsible financial management. I think this is something that we need to really look at very closely because both financial management, expenditure management, cost management, we feel should be handled by professionals because we really can't take the responsibility of the mismanagement that has happened in the public sector, also the country going into bankruptcy because of this. And also the SOE is not performing. I think by act, we need to ensure that professional accountants, either chartered accountants or management accountants, should be at the helm of all these institutions in the finance area. So that will really enable us to act independently and also to ensure the trust and confidence of everyone who is there and to safeguard the monies that are there. So this is something, and I do hope that Mr. Duminda Hulangamua, who is really heading the E&Y, will be able to take note of it and also bring it to the notice. Now, the other thing, of course, is the budget itself, because you see now, normally when from the private sector we look at a budget, we look at two key statements. One is, of course, the income and the profit and loss account. The other one is the balance sheet. Now, what we find is that the government will give their income and expenditure account, but unfortunately, we cannot see the balance sheet. Because why we are saying balance sheet is because we are really in a very, very difficult situation, and we do not know whether the loans are reducing or increasing. The foreign loans are increasing or reducing. The local loans are increasing or reducing. So I think this is something that is very essential, and maybe the finance ministry should look into this matter, because this will also be very useful to the members of parliament when they discuss it. Then the other area, of course, is the high interest element that we are paying on the interest we are paying on the loans. Now, actually, it was 2,456 billion in 2023, but now it's gone up to 2,950. So most of them are worried that at the time that we have to come to repay the loans, whether we will be again in very difficult situation. So that's why a balance sheet and maybe a cash flow statement for 3 to 5 years, if prepared, will really show the actual position of this one. But of course, we must be happy that the revenue has gone up, but again, the expenditure has increased. So on the expenditure side, now some of the key areas that have been spoken on this, we feel that the finance ministry should have a special costing and expenditure department which is managed by professionals. Professionals means professional chartered accountants or professional management accountants, because these are the people who are really doing their job in the private sector, and they should be able to do a good job in the government sector. And there are new areas that have been, of course, they have been speaking, of course, expanding the export sector. Now, these are must. This has to be given all the encouragement. And in fact, from the CMA, SME Development Committee, we have recommended the formation of export houses. Export houses which will encourage the private sector to buy the produce and the goods and services from the private sector and export it. Then, of course, foreign direct investment is of great interest. One important thing is the public-private partnership. I must say that this public-private partnership has been spoken of a long time ago. And in fact, if we enforce the public and private partnership, we would have really not gone into this debt position. Because most of these projects that were done would have been started as public-private partnerships without taking huge loans from different countries, which has added to the debt burden of the country. So we are very happy that at the moment there is no way that the government can fund these projects, that they are going into a public-private partnership, and the digital economy that they are looking at, which will be one of the best ways. Even today we are really having this our webinar due to the digital technology we are having. Now, digital technology, a lot of them have been talking of the ID cards, but we must digitalize all the government departments. That means that they will be able to be having good working conditions, but all good working conditions. Because as an example, I have given the People's Bank and the Bank of Ceylon, which have very good working conditions as a result of their going into the IT sector in 1977. Now they are on the top of this one. So if the government departments also went the same way, and they have no fear of losing jobs because the banks also have been increasing their activities, and more jobs have been created. So there are very many more, but I think these are the important things. But we will be able to also discuss on agriculture, where Senior Professor Buddhi Marababy is there, where he may be able to tell us more, because that's now a current problem with the rice and others. And I feel that today we have to go for increase in the yields and productivity. Now, cost and management accounting, that is the most important role of the cost and management accounting, to ensure that we have productivity, we have increased yields, and then the cost of production will come down. So thank you, and over to you guys.
Thank you, Professor. Next on our presentation, Mr. Duminda Kulangamu, Senior Economic Advisor to the President, Country Managing Partner, EY, Sri Lanka and Maldives, and Chairman, the Ceylon Chamber of Commerce, will deliver about the overview of the budget proposals. Over to you, Mr. Kulangamu.
Thank you very much, Rajendran. Can you hear me?
Yeah, okay.
Yes, we can.
First, I want to thank Mr. Vattavala and CMA for inviting me to take part in this webinar. I also took part in your physical session. But I must take the opportunity to actually congratulate Professor for the energy and enthusiasm he has consistently shown to bring to the people issues of importance, whether it's budget or any other development. CMA is in the forefront of organizing events of this nature, and try to bring and share information to the people, educate the people on subject matter. So I think I must congratulate Professor for the consistent interest, enthusiasm, and the vigor in which we have been working since I've been knowing you the last 30 or 40 years. So thank you very much, Professor, for that. Yeah. So on the budget, I think you just described what it is. But if I just take a step back, what we have to keep in mind is that this is a new government that came into office after several years of sort of some level of consistent policies followed by different governments. The consistent, I'm referring to the consistency policy in the parties that govern the country. And we are also under a tight IMF program that the budget 2025 has been presented under IMF program. Now, before the elections, the president made some promises to the people that that if elected, that he will try to negotiate as much as possible the DSA, the IMF, to see what benefits he can do to the people. Contrary to a lot of other theories coming out, I must say that he fought very vigorously to bring the PAYE threshold increase from 100,000 to 150,000 rupees. Was a very difficult discussion with the IMF. I took part of the discussion. It was very difficult, and he was persevering on that. And also to increase the threshold from 600,000 to 1 million rupees of the first bracket. To bring exemptions on milk and yogurt, which is largely consumed by children and rural community. He's very concerned about increasing the nutrition levels of children. Then also he was, when he took over, it was the rate of income tax on foreign services was agreed at 30% by the IMF. But he was able to negotiate that to 15%. So I'm just trying to say that these are some of the benefits that he has brought to you through the budget and pre-budget. Now, the budget has been, I mean, those are the few things that we're able to get. The budget has been worked and presented under very trying circumstances. We are under IMF program, and we had to maintain certain fiscal targets under the program. With regard to fiscal, as all of you know, we have to have 15.1% revenue to GDP target. a tax revenue of 13.9%. We had to show an increase of 1.6% over the previous year. We had to maintain a primary balance of 2.3%. We had allocate 4% of our GDP for capital expenditure. IMA was insisting that we allocate 230 billion for welfare, which includes assessment, increase public sector salaries, and certain other welfare programs. So within those constraints, only the budget has been presented. So I think in that context, what I want to say is that the fiscal space is very tight to give relief. But even in that tight situation, some relief has been granted to public servants by increasing public sector salaries, which are not equal. For 4 or 5 years, there was no increase in public sector salaries. The school book program that was granted for children, low-income family school children. We had to take part of the Sri Lankan Airlines debt. So all that put together, we had to make sure that we remain within 1.3 trillion of expenditure on the salaries and a further 1.3 million in respect of pensions and other goods and services. Then, of course, our biggest elephant in the room is the interest cost, which is close to 2.9 trillion. We end up with a deficit of 2.2 trillion. So that is where the overall budget is. Now, in the budget, in terms of the income and expenditure, as I told you, we have a little fiscal space for stimulus and growth. A lot of people that I talk to, a lot of people that we hear, they say that they need tax incentives to grow the economy, where we don't have incentives compared to the region. Region rates are much lower than ours. Personal income tax rates are much lower than us. And therefore, we are not competitive from a fiscal point of view, is what most people are bringing up. So I agree with them. I don't say no. But there is no space that we have to accommodate any tax concessions for the reason that we have to remember that we are a country that is in default. We're just coming on default status. We have got a moratorium on our debt. So we need to grow the economy by 2028. So within this period of time, we don't have any leverage that we can give on the income side in order to accommodate the growth. So from where do you then bring growth is the question people are asking. So the growth will have to come from not from the tax lever, but to bring growth from deregulation. If you look at the budget, that's what the president has mentioned, that he's going to bring the PPP law and encourage PPP projects where private sector will be encouraged to invest in government projects. We are already having discussions with various ministries to start the port project, start the airport project, start the expressway first phase, to start the way under dry docks, extension of rail line from Colombo to Umagama are some of the big infrastructure projects that we are currently in discussion. Of course, they will take its own time. We are trying to see how we can start up on the projects during this year itself, because we feel that about $3 to $4 billion of new money must be pumped into the market. And that kind of money can come only through a PPP projects and funded projects. So we are in discussion, evaluating to see how some of the stall projects can start as soon as possible. At the same time, how some of these projects can be opened out to private sector, including the energy projects that we are evaluating currently at the moment. So that is one way of bringing growth, and that is the only way is through investment. Then also the BOI is opening a few zones that are required in the north to see how you can have dedicated zones in the north and east to bring investments. At the same time, we are trying to see how you can do 2 PPP projects on 2 digital parks, one in Kurunegala, one is in Galle. Construction work on parks commenced during the last government. So we want to continue those projects and see how you can encourage and handle the 2 parks in Kurunegala and Galle, perhaps, or 2 digital parks on a PPP basis. Then the biggest or the lowest hanging fruit the government has mentioned in the budget is the tourism industry. Tourism is doing well, and I'm sure it will double, triple by 3-4 years time. To grow 4 billion to 8 billion is easier than taking manufacturing from 2 billion to 10 billion. So government is very conscious of the tourism industry and what needs to be done to encourage and increase the number of arrivals. At the same time, the president is very keen to, our destinations are very traditional, as he has mentioned in his budget speech. They are confined to certain areas of the country. We need to see how you can expand these areas and take them to new areas, new destinations on tourism, especially Anuradhapura, Polonnaruwa. Those areas are not getting as much as we require. So trying to see how you can encourage tourism more into those areas, into unexploited areas so far. how you can change the product. For example, currently it's only room nights, how you can go from room nights to more entertainment tourism, retail tourism. So those are all been worked out because we have to find some, we had to deregulate certain areas. We are introducing new regulations. So we need to see how you can diversify the tourism product in order to encourage more tourists to come in, and also get them to spend more than what they're actually spending on rooms and food. We want them to do retail shopping. So for that, we did out on duty-free shops. We need to make sure that we have a tax structure that protects revenue. At the same time, we encourage foreigners to come and purchase at competitive prices. So that's being worked at the moment. Then, of course, digital IT, I told you, is one of the cornerstones of the government's intentions. We are trying to see how we can open 2 regional parks on that. And shipping and logistics, one other area, big area, which the government wants to expand from West Container Terminal 2. The East Container Terminal, which is handled by SLPA, will most likely commence operations in June, July. In spite of the fact it's only 70% complete. And then the West Container Terminal 2 and other logistics centers we are looking at to see how we can open. So the only way that we feel that growth can come is through public-private investment, as Professor just mentioned. So the tax lever cannot be used too much to see how you can encourage more investment in the country. Port City also we are looking at the SDP Act because there are certain anomalies in the Port City law, and then there are some kind of fine-tuning required to the SDP Act to make sure that the tax holidays are rule-based. So is the Port City. We have to make sure it's rule-based and see how Port City can be sold on a sustainable basis. So overall, that is sort of the base on which the budget has been prepared. Then, of course, to look at what the president said, whatever development we do must be inclusive development. We can't have only one sector of the country developing, that's inclusive development. So in that intention only, I think he has mentioned we are continuing the fertilizer subsidy. We are continuing with the special program. We are continuing, in addition to that, we have introduced a 3% senior citizens interest subsidy, where a person who gets up to who has a deposit of ₹1 million will be getting a 3% interest subsidy. So we are trying to see how you can work this on an electronic platform. Last night we had discussions with developers to see how you can have one platform to make sure that this subsidy is not abused by people and that it works on a ₹1 million deposit. And to see how the withholding tax system also can be combined in the same platform. So the government is working on it. Then a big push is for digital infrastructure development. As you know, already ministry has been created, and Hans, who all of us know, is in charge of that ministry, at least not the ministry, rather the project. So we are first going to start with the digital ID project, and then that is about $19 billion project, minimum funded one, and then that will be sort of the main backbone, and to that you can add a lot of other things like inland revenue, customs, RMB, all can be added to that big platform, so that you have, at say 5, 6, 7 years from now, you'll have a platform, a database with a lot of information, all information that a person requires. That you don't have to go to an office to do your job. The objective is that we don't see an office, you don't go to an office to get government service. That is the ultimate objective we are trying to reach. It, of course, it won't happen in 2, 3 years. It's a long-term project. Then, of course, on the bilateral funding side, we are working very close with both India and China. As you know, we are already discussing with China on the refinery project. It's not finalized. The terms and conditions are being discussed at the moment. With India, we are discussing to create an energy hub in Trincomalee. We are discussing on the energy transmission line between India and Sri Lanka. So those are being discussed with India at the moment, and those will get finalized throughout probably during the year. Then the power plant joint venture between the CB and India in Sampur will most likely commence construction in April of this year. Then the other bilateral projects like the airports and the roads will start this year, currently most likely. So those are how we look at it to see is how do we bring growth to this country? How do we bring foreign currency to this country? How do you build up our reserves? Is through opening up the economy and encouraging private sector to invest and having this public-private dialogue and partnership going forward. So the tax lever is very little space we have. A lot of been spoken of the vehicle taxes. I can tell you vehicle taxes are not going to come down. It will remain the same as been imposed current year. What we expecting from vehicle tax is about 300 billion rupees, 1% GDP. It's slow at the moment, but we feel the pace will pick up, momentum will pick up, and the vehicle taxes will bring in the desired revenues. We are confident of that. And it's about 300 billion rupees that we're expecting from the vehicle tax. So, I mean, I have seen a lot of discussions on the vehicle tax in terms of what is right and what is wrong. In fact, that VAT was there before, now is we'll consolidate, and once again VAT came. So those are all theories that I understand, but in the end, we are looking at how much to collect from the amount of dollars that we can reserve for the vehicle imports. So I know a lot of this year's revenue, 1% of GDP, or the 1.61% is from that source, and we are following very closely whether we can get it, and I'm sure we can get it. The increase of tax on withholding tax of 5-10%. We feel will increase the collection. Also because the compliance will increase. More people will comply with and try to claim 5% credit. So we feel there will be a more compliance as a result of the increase of the withholding tax rate. So in a nutshell, that is the budget and the broad proposals. I mean, the president's basic theme was inclusive growth. We have to grow the country. We have the private sector involved in growing the country, but the benefits of growth must go to every corner of society. And that is how the budget has been prepared. The welfare program prepared based on that. Salary increases are based on that. The private sector initiatives are based on that. And I feel that if we all work together as a country, as a team, we can realize this. Object of the budget. And I think everyone's duty is to see how each person can play a role in the development of this country. So I hope everyone participates in the process. And I would conclude with that, Professor. If I have missed out anything, please let me know. I can stay for about another 5 minutes. I have to leave at about 3:30, 3:35. So I can stay for about 5 minutes if you want. Take any
you can take a few questions. Would you be able to? Just one thing that of course, I got, it is really on this transport sector and the say tourism, transport and the vehicle duty and the taxation. What they feel is that as a result of the vehicle prices going up and maybe out of proportion to the normal one, the financing might become a major problem, and which means that the lease payments, interest payments would be very high, and whether the rates will go up as a result, that they might maybe that they will have to jack up their rates. I don't know whether you have looked into that matter.
Jack up the rates of what, Professor?
No, that is maybe the hiring rates as a result of this. When they go invest in new vehicles, the cost will be so high, the depreciation, the interest payments, lease payments.
That is for the public transport you're referring
to. Public plus, of course, even the tourism sector.
Commercial. Yes. So obviously it will go up because the rates at which they are coming. I mean, the taxes are higher than usual, but public transport and commercial don't have the same levels of tax as private cars. We don't have a luxury tax and we don't have unit based, so it's not as high. The structure is not as high as private cars, but public transport and commercial also has certain taxes that we impose. So it definitely will be because your stock is old, the new stock will come at a higher price, and it definitely will increase. So you're conscious of that.
There is another question. Don't you think the removal of exemption on foreign service income and foreign source income will be counterproductive? Such persons could park part of all of these funds overseas instead of remitting to Sri Lanka.
You see, Professor, when we are preparing a tax law, it is prepared on the basis that people will comply. It is difficult to prepare a tax law to overcome evasion and to overcome non-compliance. So it's not prepared on that basis. We can't prepare a tax law to say, okay, why do we need taxes to fund the deficit? So 95% of Sri Lankans are living below a salary of rupees 200,000 per month. 85% are living below 100,000 per month. So only 5% actually can afford to pay tax. So in that situation, if we relax, whilst we tax VAT on an estate laborer who earns 1,005 rupees a day, with all taxes that he or she consumes, the logic and the rationale for leaving out those who earn much more than that tax-free is not equitable on the equitable side. So the rationale for a tax is not based on whether he or she will pay or will keep the money overseas, on the basis of what is the competitive rate. So we restrict to 15% because the global tax on most services is 15% on Basel I. That's why we kept at 15%. IMF proposed to make it 30%, but some of the president argued and said to keep 15%. Because 15% is a competitive rate compared to most countries in the world. But I know there are countries that don't tax anything at all, they pay zero. That's tough luck. If they don't want the money to country, there's nothing we can do about it.
Can we just take one more question then? I will ask maybe those who are on the panel, if you have a question, please.
Rajan's hand is raised, I can see. Yeah.
No, it was raised earlier also. I don't know whether he is raising for that or anyone else who would like to ask a question, please. Right, I think they are not having anything, so most probably it is okay. So anyway, thanks very
Thank you,
much.
Professor. Sorry, I had to leave, and
I
thank you very much, Almighty, once again, and all the best for the rest of the sessions. Thank you very much.
Yeah. As you mentioned, I think a large number actually at the moment 477, so it is a large number present. So
I think
I'm
you are
sure
doing a great job, so congratulations on
your address will certainly help, and I'm sure that you will help the professional bodies, because we are really doing this inclusive education, If you look at our education costs are maybe even less than 1/10 the cost of foreign education. But the government is not speaking on that, because we are giving both the academic and the practical experience with the government saying should be job ready. So if you can take up that matter and maybe advise them to give us some support, that is enough. We don't want money, but just to say that you take professional education and they will, that will take you to a job, Thank you very much.
Thank you very much. Thank
Thanks.
you. Thank you.
Thank you very much, Indra. Thank you.
Thank you,
Rajendra,
Mr. Purangamo, for your overview on the budget. Next item is on the agenda is the tax proposal, which will be presented by Mr. Atula Ranavira, Managing Partner, Ranavira Associates, Chartered Accountants. Over to you, Mr. Ranavira.
Thank you. Good afternoon to everybody. Am I?
Yeah, we can hear you.
Yes,
no
we
problem.
can. Okay. Right, I'll share the document. Yeah, I think this document is visible.
Yeah.
Yes.
Right. Now, actually, we at CMA, we planned this webinar. After having a physical session, we thought of going for a webinar for more benefit for more people. And at that time, we planned for to discuss the budget proposals. Now, after planning, on 22nd, government issued 2 amendment bills. The amendment bill which relate to the income tax and amendment bill which relate to the VAT. Therefore, I thought of covering those 2 also in my session as much as possible. Right. Now, I change the heading also, tax budget proposals and amendment bills highlights. Right. Now, first we'll see the importance of tax in Sri Lanka. Now, this table is extracted from the government budget estimates, government budget 2025. As per this, the government revenue, total revenue and grants, mainly tax and other things, little bit grants and other income. In 2023, it was 11.1. It went up to 2024 for 13.6, and we are expecting to go up to 15.1 in 2025. We are budgeting for 15.1. Now, out of this amount, 4,990 billion, almost 4.590 billion is from the tax revenue. The tax plays a major role in this government revenue. Then when we take the expenditure also has gone up slightly, 19.4 to 20.4, then 20.4 to 21.8. As a result, ultimately, we are ending up with a budget deficit. Now we are planning for a budget deficit of 6.7%. When we see the budget speech, major financing of this deficit is the local financial institutions' borrowings. Right. Right. Keep that in our mind. We will move forward. Now, this budget, prior to the budget on 18th of December 2024, President make an announcement in the Parliament saying that various tax changes are happening, proposing. In the budget speech, it says those are also incorporated into the budget. As a result, we have to consider whatever the proposals given on 18th of December by the President. Now, I'll move to the next slide. Now, in this is a small index which I have given. I'm not spending much time for that. Right. Now, first we'll see the changes proposed with relate to the individual's taxation. One, as everybody knows, the personal allowance of 1.2 million is proposed to increase to 1.8 million. Accordingly, this is already incorporated into the amendment bill issued on 21st of last week, 21st, right? Then remove the second slab of 100,000 rupees and increase the first slab from 500,000 rupees to 1 million. Then in future, the second slab will be at the rate of 18%, not at the rate of 12%. No more 12% rate for individuals. 6%, first 1 million, 6%, next 5 lakhs at 18%. Right. These changes are included into the amendment bill. Now the bill is ready. Then it is the public objection period. After the public objection period, they should put this into the Parliament and get it acted. Then now, according to these changes, personal allowance and the slab change. What will happen, depending on the amount of the income, will save 42,000 to 228,000 rupees per annum. I prepared a small reconciliation, the current tax, the proposed tax, and what is the savings. I have put saving amounts in different income levels. As an example, at the income level of 1.5 million a year, accessible income of 1.5 million, not total income, accessible income of 1.5 million, you will be able to say you are getting a savings of 18,000 rupees a year. Then if it is 2.5 million accessible income, 102,000 saving. Then if it is 3.5 million accessible income, you will be saving 192,000. Thereafter, at 4 million level, you will be saving 228,000 rupees per annum. Thereafter, this is the saving 228,000 per annum. Right. Then we'll move to the next slide because I had to manage the time. Individuals' income tax with relate to other changes with relate to the individual. One of the most important change is taxing of export of services. Now, as you all know, in our tax law, in the third schedule to the Inland Revenue Act, item U3 and item U4, U3 and U4 talk about this exemption. One covers the service exports, the other one covers any foreign source. Service export, anybody can understand, but any foreign source mean maybe even black money if you bring to Sri Lanka. Under the Inland Revenue Act, it is exempted at present. In future, it will be liable to tax at the rate of 15%. 15% rate is introducing with effect from 1st April 25. Right. Then now, in the case of individuals, as per the bill also, in the case of individuals, this 15% is the maximum rate on service exports. In the case of other entities, non-individuals, all non-individuals, it is a flat rate of 15%. It's a flat rate of 15. Now, a lot of people are asking what will happen to our migrant employees' salaries. Yes, migrant employees' salaries are also liable to tax. But we have to think about our residency principle. Therefore, I have put a special note. Note that this tax liability applies only if the person is a Sri Lanka resident person. If it is a Sri Lanka resident person, then this tax applies. If that particular employee or person is not a Sri Lanka citizen, Sri Lanka resident, then over its income is not taxing in Sri Lanka. Because the citizens are liable to pay tax in Sri Lanka on the world income, whereas non-tax residents are liable only on the income generated in or from Sri Lanka. Therefore, some employees who are in abroad for a couple of months and bring that earning to Sri Lanka, they'll be liable to this tax because if their residency continues under the section 69 of the tax law, then those people, they have to pay this 15% tax. Right. Then a non-resident Sri Lankan migrant employee is sending money to Sri Lanka. If it is non-resident, no tax in Sri Lanka. But in that country, there may be taxes in that country. Right. Then if that particular person is a resident for Sri Lanka taxation, then somebody might ask whether there's any double taxation. Yes. If that employee is working in a country where double tax treaties are there with Sri Lanka, double tax agreements are there with Sri Lanka, then that person can enjoy the double tax agreement conditions. Otherwise, definitely he has to pay a tax twice if he is a resident for Sri Lanka taxation. I think that is clear. Next, withholding tax rate of 5% on interest and discounts will increase to 10%. I think I'm favorable for this, but conditional. Only with direction facilities. But as per the budget speech, as well as this amendment bill, nothing like that, nothing effectively, right? Therefore, we know that the professionals who are in tax profession knows that the most difficult task of our professional life is getting refund from IRD due to various reasons. Now, therefore, if there's no direction facility, it's a big burden to the taxpayers. Next, granting of withholding tax non-deduction facility for senior citizens, they are giving a non-deduction facility. Suppose that senior citizens' total assessable income is not more than 1.8 million and 1.8 million, then they are giving they are getting declaration facility to the bank and get avoided the tax. Right. Then non-senior citizens situation. Non-senior citizens having assessable income not more than 1.8 million a year will be entitled to a refund of withholding tax deducted on interest within 3 months without IRD's audit. Now, this says as senior citizens provision. As per the senior citizen provision in section 152, capital AA, there's a provision. Now, as per that provision, existing provision, it is quarterly basis. Quarterly not more than 25,000 rupees. Now we have to, as per the amendment, what they have proposed in the amendment bill, this is not properly covered. There's another refund coverage, but not directly connected to this. It's if the issue is, if the income is little bit over 1.8 million, what will be the situation? When they are legislating, they should concentrate on these things. Then relevant guidelines and declaration formats to be issued by the Commissioner General. Yes, after considering these repercussions, he should issue these guidelines. But at the same time, The law should facilitate that. Then senior citizens will be allowed to file income tax returns manually for the year of assessment 24-25 onward. Yeah, a lot of senior citizens were criticizing the filing of electronic mail. Therefore, they say for them, they can continue the manual filing. Right. Then, next, with effect from 1st April 25, as per this amendment bill, they have included certain refund methodology. Resident individuals' refunds to be made by the Commissioner General within 3 months. Within 3 months, I have summarized that in a table form. Summarized. If it is a non-senior citizen, if the refund claim is not more than 60,000 rupees, not 1 lakh, not more than 60,000 rupees. At present, it is 1 lakh. Not more than 60,000 rupees for a year of assessment 24, for the year of assessment 24-25 or prior years, then they are refunding that. Commissioner General is refunding that money within 3 months. Then if the refund claim is more than 180,000 rupees for the year of assessment 25-26 onward, then Commissioner General has to refund it within 3 months. Okay, good proposal, but I can't understand why this 1 lakh amount reduced to 6 lakhs. Then the senior citizen situation. Senior citizen, if the refund claim is again not 1 lakh, it is 60,000, reduced to 60,000. Not more than 60,000 for any year, or 15,000 a quarter, not more than 50,000 a quarter for year of assessment 24-25 or a prior period, Commissioner General should refund it within 3 months. If the refund claim is not more than 180,000 for a year of assessment or 45,000 for a year quarter for any year of assessment 25-26 and in future, then Commissioner General should refund these things. These clauses are already included into the amendment bill. Next, new provisions clarifying the chargeability of income tax on life insurance proceeds. They are trying to introduce something like that. At present, if the policy is about 10 years and enjoined by a senior citizen, there's an exemption. I don't know what they are going to do with this. Anyway, we have to wait for the proposal to discuss that. Then next, individuals and partnerships investment capital gain tax rate. Investment capital gain tax rate will be increasing from 10% to 15%, while all the others will be at the rate of 30%. At present, only the company is liable to 30% and all others 10%. Now in future, 10% will increase to 15% and 15% will be available only for partnerships and individuals, not for anybody else. I think this is not a wise proposal because this will badly affect to the capital market of a country. These things are affecting to this capital market, affecting to the capital market mean it is badly affecting to the capital market for the development of the country. Then 3% additional interest on senior citizens deposits up to 1 million per person with effect from July 25. That means 1 million at the rate of 3% additional. That means you will be benefited 30,000 rupees, maximum 30,000 rupees per annum. Per person, 30,000 rupees per annum is the maximum saving. Next, enhanced duty-free allowances for Sri Lankan migrants, but we have to wait for the law to understand what they are going to do. The requirement of filing self-estimated tax return set will be abolished with, from 25-26. I can't understand why they are removing that. I think there's no harm of continuing, but a lot of people are criticizing, that's true. But to me, there's no harm of continuing because it's an alarm of tax payment, tax liability. Anyway, now they are removing that. Right. Then, next, preceding year basis will be introduced for computation of self-estimated tax installment. At present, there's a big weakness in our law. Though the 2006 Act, this Act contained a provision to base the quarterly estimate on the previous year. But in the current law, there's nothing like that. We can estimate the way we want. Therefore, now after noticing this weakness, they are proposing to introduce the preceding year basis. But at the same time, when you are issuing the preceding year basis, you have to cover, like in the previous Act, some penal provision also, penalty charge provision also to be amended accordingly. Otherwise, it might create unnecessary issues. Then tax residency basis for Sri Lanka ship employees and Golden Paradise resident visa people changing may not be much important for us at this juncture. Non-residents income from Sri Lanka airports. Now at present, when a non-resident person do supply of aircraft, software license or other related services to Sri Lankan airline, it is exempted to that non-resident person. Now they are expanding this exemption, extending this exemption to the supplies to Sri Lankan airports as well. Next, current transfer pricing treatment on transfer of assets by an individual to associate or to charitable institution will be expanded to transfers to the government and government universities as well. Now, at present, as per that section, it says you have to assume the consideration is equivalent to the cost. When the consideration is equivalent to the cost, there won't be a profit. Therefore, at present, no capital gain, and as a result, no capital gain tax. That benefit they are extending to the transfer into the government and government universities as well. Then a tax amnesty, they are proposing some type of a tax amnesty without the word tax amnesty, but anyway, some type of amnesty. The Commissioner General will authorize to waive off. Commissioner General will be authorized to waive off the interest on tax liability arising for the year of assessment 22-23 or before period, if the total tax is paid within 6 months of legalizing this amendment. Suppose this amendment legalized by 15th of April, we will say, then we have 6 months from 15th of April is this time period to settle all taxes, old taxes, then you will be relief from the charging of interest. Because interest is a killing thing, 1.5% per month interest. It's a killing thing. Therefore, this proposal is good, but I can't understand why it is so only up to 22-23, why they are not covering 23-24 as well. Next, implement the imputed tax on properties will be suspended. IMF wanted to introduce an imputed tax, and it is not implemented into the law. Then removal of import restrictions on motor vehicle in stage by stage. I'm not going to talk on this matter. It is relaxed with unbearable taxes. Right. Betting and gaming and import or manufacturing and sale of liquor and tobacco. Income tax rate for anybody, any person, will increase from 40% at present to 50% with effect from 1st April 25. Even individual companies, trust, whoever it is, at present the rate is 40%, it will go up to 45%. Then year of assessment 24-25 onward, refunds to be claimed within 30 months. If you want to claim a refund, a valid refund, you have to claim within 30 months. It is talking about refund claiming and credit both. From the date of filing the return, that is 30th November of the immediate subsequent year plus 30 months. Next, VAT-related things. Yeah, VAT-related things. Within 5 minutes, I have to stop. Yeah. There are certain changes which relate to VAT. Digital platform services is liable, is making liable to VAT at 18%. That's a long-awaited proposal. It is welcome. Then removal of VAT, SVAT system with a risk-based refunding system. My issue is who will take the risk? Who will take the risk? Are we encouraging the government servants to take the risk and refund this? Therefore, with our experience, with the past records and all, this might create a lot of practical issues. Ultimately, these indirect exporters, mainly indirect exporters and also exporters, might end up with a lot of liquidity issues with relate to delay of getting the refunds of this 18%. 18% on turnover is huge. Then if there's no quick refunding system, they'll be in trouble. Therefore, this is, I don't think this is a worthwhile proposal. Right. The entertainment tax of a film hall will be allowed to deduct from the turnover in arriving at the VAT liable turnover. That's good. Then certain changes with related to tsunami construction projects, some delayed things are there. Disallowing on input tax deduction on deferred tax. Yes, deferred tax, we shouldn't give that. But there are certain incidents where some people, they have claimed it. Therefore, we should stop it. That's good. Mandatory use of point of sale machine. This is one of the best proposal. But the problem in certain other countries, this is happening very well. But the problem now to digitalization of these things, especially for sales-based tax, is so much important. But who is going to bear the cost of equipment, post-machine equipment? Either government should subsidize these machines to promote these things among the business people. Then steps to exempt VAT on packing materials of pharmaceutical and Ayurvedic products. Then supply of goods and services by or any business identified as approved as a business of strategic importance in Colombo Port City related things. Then yogurt, it is already announced yogurt and dairy products will be exempted because it is not covered in the VAT exemption. At present in the VAT exemption part 3B, Item 13 of the part B of the B13 of part 3 of the VAT exemption schedule. First schedule, all unprocessed agricultural producers are exempted. Even things like eggs, live birds, day-old chicks are now exempt under that category. Unfortunately, even milk is exempted under that category, but unfortunately, the yogurt is a manufactured product. Therefore, it is not exempted. Therefore, they are extending this facility to them also. Right. Then next, SSCL related changes are also few changes are announced. Mainly transportation of goods and passengers related things, then the wholesale and retail sales of kerosene, selling those things in a filling station, that is also covered. Then SSCL exemption will be extended to institutional which has entered into agreement with CEB to produce electricity and supply to the CEB. At present, it is exempted, the CEB exempted, but other producers are not exempted. This exemption is on machinery, right? But the thing what I can't understand, they says prior to 18th February 2025. I can't understand why they are limiting only up to this date. Then in future, this will be liable. I can't understand the sense of putting a date like that. Right? Stamp duty on agreements, they are increasing from 1% to 2%. Then betting and gaming levy at At present, it is 15%. They are increased to 18%. Then casino entrance fee is proposed to increase from $50 $50 million, 50,000 to 100 million, 100,000. Then Tax Appeal Commission, there are certain proposals which relate to the Tax Appeal Commission. That area will be covered by another resource person. Therefore, I am not going to cover that, though it is in my note. Then next, government employees remuneration. They are proposing to increase the government employees remuneration. Minimum of, in public sector, minimum of 8,250 rupees per month. Universities minimum of 8,253 rupees per month. SOEs minimum of 10,750 rupees per month. But this increase is in within 3 years. First year, it is 5,000 plus 30% of 3,250. Second year, 5,000 plus 65% of 3,250. That means in the first year, the increase may be about 6,100 rupees. I heard that out of these 6,100 rupees, already the government has given 5,000 rupees about a month back. Then the current increase will be 1,100 rupees. Likewise, there's a slight increase during next 3 years. Then pensioners also, remuneration will be increasing. Yeah, time up. That's all for the time being. I will talk about this in detail later, but at the same time, I would like to mention with relate to that overseas income making liable to 15%. Lot of people are talking about the dividend, whether the overseas companies dividend, when you bring it into Sri Lanka, whether that also will be liable to tax. At present, if you are having a substantial investment in overseas company, that is more than 10% investment in overseas company, you are eligible for a tax exemption under item R of third schedule. Item R of third schedule. Now that if they will not change, that will continue. All other people who are not having substantial investment, that means less than 10% investment, will be liable to 15% tax in future. Okay, thanks everybody. I will share this document after this session for all registered persons. During the question and answer time, we will attend to audience questions. Thank you.
Thank you, Mr. Ranavira, for your comprehensive presentation. The next presentation will be delivered by Ms. Chamarin Tilagaratna, Partner and Tax Leader, Deloitte, on the topic of Tax Appeal Commission and Vehicle Import Taxes. Over to Ms. Tilagaratna.
Thank you. Let me just share my screen. Is my presentation visible?
Yes.
Yes, yes.
Okay, good. If at any time it does stop moving, let me know. I will refresh it. Okay, so thank you for joining us today on this webinar. My topic, or the topic that I've been given to speak on, actually two topics. One is taxes on motor vehicles, and the other is the amendments that were brought with respect to the Tax Appeals Commission. So I'll start with the taxes on motor vehicles. This is a snapshot of the journey of the motor vehicle taxation on importation since 2014. I'll go into it in detail in the following slides as we go along, but I'd first like to give you an overview and a snapshot so that the explanation is more relevant. So 25th October 2014, that was the date that everything sort of changed. And immediately before October 2014, on importation of vehicles, these were the taxes that were applicable. So there was VAT, NBT, customs duty, PAL, and cess. On 25th October 2014, in an attempt to simplify the tax system and to make it more easier, there was a proposal which was implemented to consolidate all of these taxes into one tax, which is the excise duty. Right, so all these taxes are consolidated into one composite tax as a means of simplification of the tax structure of taxes on importation of vehicles. That continued to 2019. However, in 2019, in addition to this composite tax of the excise duty, there was a luxury tax that was introduced, and how that is charged, and the rates and so on, I will explain as I go along. But just keep in mind, so in 2014, we had one composite tax. 2019, this composite tax plus luxury tax was introduced. Then we have, of course, this little gap here in 2020 where we hit the financial crisis or economic crisis, and the importation of vehicles were restricted, and there was little or no vehicles being imported at the time. And that continued until, of course, 2025, and now it has opened up. So in between this period, between 2019 and 2025, in 2024, there was a tax again, another tax that came in. So we had the Excise Duty Act, and then we had the luxury tax, and in addition to that, the VAT came about. Now, I just mentioned that before 2014, the VAT was consolidated into this tax, but again in 2024, the VAT came about, and I'll explain why that is and how that took place. Then when we move on to 2025, we now have the excise duty, we have the luxury tax, we have the VAT, and in addition, customs duty and the surcharge on customs duty was also introduced. Okay, so this is the snapshot, the overall picture of the journey of the taxation. Now let's move to each phase. So I mentioned in October 2014, all these taxes were consolidated and made a one composite tax, excise duty. So this tax was based on the HS coding of the motor vehicles. It was charged by way of a percentage rate or a fixed rate. Now, where it is irrelevant to the percentage rate due to the change in the foreign currency rates, any inflation is automatically captured in the price change and the fluctuation of the exchange rate. However, where it is a fixed rate, the inflation was not captured. So in order to address that, they have since the date of the introduction of this composite tax, annually published an inflationary adjustment for excise duty to capture the inflationary costs. So annually, this has been happening. It's not something new. It's been happening since it was introduced. And then we moved on to 2019. So we had the composite tax, excise duty, and then a new tax was introduced, luxury tax. So let's take a look at what that is. So the luxury tax on motor vehicles came into effect from 6th of March 2019. It was charged on specified motor vehicles where the CIF value or the ex-factory price value exceeds a particular tax-free threshold, and it has specified rates. Now, these rates, these tax-free thresholds were revised in effective 31st January 2025. So immediately before that, so since 6th March 2019, the thresholds were as follows. They were 3.5, 4 million, and 6 million. Effective 31st January 2025, these thresholds, a tax-free threshold, was revised upwards. So the rates are charged on anything in excess of this threshold. Okay, so the reason the thresholds were revised upwards is because in 2019, the cost structure was very much different to the current cost structure. 2019, the exchange rate very much different to the current exchange rate. So the vehicle prices now at present, there's a huge significant increase in the vehicle prices in 2025 vis-a-vis 2019. And so these thresholds that were prevalent in 2019, the tax-free thresholds are prevalent in 2019, was obviously not sufficient. And if it remained, it would actually capture not only the luxury vehicles, but also the lower-end vehicles. So as a result, submissions were made and the thresholds were increased, but the rates nevertheless remained the same. And it's on identified HS codes. Okay. So again, so 2014, we had the composite tax. 2019, we had luxury tax being introduced. And then, of course, we hit the economic crisis where the importation was suspended. And in 2024 also, it was still suspended. It will only be opened up in 2025. However, in 2024, in addition to these already two existing taxes, the VAT came about again. Now, VAT was here already at 12% and consolidated into the excise duty. But again, in 2024, the VAT came about, and let's see why that is. So in 2024, October 2024, 25th of October 2024, when all the taxes were consolidated into one composite tax, obviously then amendments have to be made with respect to each of those legislations of each of these taxes to exempt them from those taxes. So in October 2014, there was an exemption that was brought in, the exemption schedule of the VAT Act by Amendment number 11 of 2015, where it said if you are liable to that composite tax of excise duty, then you are no longer chargeable to VAT because it is specifically exempted. For whatever reason, this exemption was removed by Value Added Tax Amendment Act number 32 of 2023 on 1st of January 2024. Now, whether this was done inadvertently or whether it was done with a specific purpose, it's a debate or it's a moot point. But nevertheless, this was removed. The exemption was removed from the exemption list, which meant that now automatically the VAT comes in to play when you import a motor vehicle. Now, perhaps the reason in 2024 no one made too much of a noise about this is because at that time the vehicle market was closed and little or no vehicles were imported, and no one really noticed this exemption removable and an additional tax coming in now at 18%. Previously 12, now coming in back again at 18%. So this was there effective 1st January 2024 as a result of the exemption removal, but came to the limelight, so to speak, in 2025 when the vehicle import restriction was lifted. So now we move on to 2025. So we had the excise duty, composite tax, excise duty plus luxury tax to which VAT was added. And then in 2025, we had a change in the excise duty, and there was also customs duty and surcharge on customs duty introduced. Okay. So let's take a look at what that is. So excise duty, I mentioned earlier that there was an inflationary adjustment which is done annually on all excisable items, not just motor vehicles, on all excisable items, cigarettes, tobacco, and so on, to capture the cost, the increasing cost in inflation, where it's a unit-based system. This is done annually. So really, in 2025, on 10th January, this inflationary adjustment was again published by way of a gazette order, and it came to about 5.9% on all excisable items, including motor vehicles. So it's not something that was specifically introduced for motor vehicles. It has already been there. It was just continued. This inflationary adjustment. However, there was another excise duty which was brought in with respect to electric vehicles. There was an additional tax of 100% on identified HS codes under HS headings 87.03 and 8704. And this was published by a gazette dated 31st January 2025. There was a 100% increase on excise duty on electric vehicles. Customs duty, again, I mentioned previously, was one of the taxes that was consolidated into one composite tax in 2014. But in 2025, on 27th of January, a gazette order was issued reimposing the customs duty at the rate of 20%, effective from 28 January 2025. This is when the motor vehicles started to open up. And in addition to that, there was a surcharge of 50% of the customs duty, again by gazette order dated 31st January, to be effective 1st February for a period of 1 year on identified HS codes. Again, the HS codes are given. So effectively, customs duty is now around 30% on these identified HS codes. There's an increase of around 30%. PAL and necessia. So PAL was again one of the taxes that were consolidated into that one composite tax. And there was an exemption as a result at the time of consolidation. Then there was an exemption given under the PAL regulation. That exemption still continues. It has not been reimposed. At the time of consolidation, we had the NBT. The NBT was then subsequently abolished. The Social Security Contribution Levy, which was sort of a replacement for the NBT, came into effect on 1st of October 2022. And there was an exemption under the exempt articles under Amendment Act number 15 of 2023, which again said that any motor vehicle which is liable to the excise duty on importation is not liable for SSCL. So that exemption was effective 8 September 2023, and that still continues. This has not been taken off, so that exemption will continue. Okay, so that is sort of the journey of the entire structure of taxes that took place from 2014 to 2025, and the reasoning and the legal legislation behind how that came about. Now there are some other conditions that were also brought in as a result of the motor vehicle market being opened up. So there are some challenges that the government faces with the opening of the motor vehicle market. One is, of course, to manage the foreign currency outflow. They're conscious that they don't want an immediate huge outflow in the first year itself for vehicles alone, as that might create a strain on the foreign currency reserves. There's a pent-up demand for about 5 years. Then they also have to manage the taxes, manage the second-hand vehicle. They have to actually manage the second-hand vehicle market, and that has to be done through the taxes. So there's currently the vehicles that are currently under lease through financial leasing institutions. They are at a certain value, and those leases are continuing. If by chance the motor vehicle market is opened up and the cost is lesser, then of course that the second-hand market and the finance leases or the whatever the leases or the rentals attached to that second-hand market will then collapse, because obviously people will terminate the lease they have. If it is more cheaper to buy a newer vehicle, they terminate the lease and go for a newer vehicle and lease the newer vehicle. But then there is a loss to the financial institutions, and that also has to be managed. Then of course there is also an expectation to increase revenue collection from the importation of motor vehicles, and Duminda mentioned that they expect about 300 billion to be collected from motor vehicle taxes. So based on all this, the market, though opened, has to be somewhat monitored and controlled, and that is what the government has done by way of some regulations. And so what are those regulations? So one is that the importers, the people who can import are those only who register with the Department of Motor Traffic and state institutions, and any other importer other than those who are registered with the motor traffic or state institution can only import one vehicle within a period of 12 months. Then every importer or buyer has to provide an affidavit, TIN, and other documents to the Commissioner General of the Department of Motor Traffic. Now, there's also a control brought in terms of registration. So there is a rule to say that the motor vehicles once imported has to be registered with the Motor Traffic Department within 90 days of the bill of entry or custody, in the name of the buyer or in the name of the importer. So why is this? The rationale probably there again is to make sure that there isn't an unnecessary buildup of stocks. Importers would otherwise just import vehicles in stocks, keep it unregistered, and keep it to be sold over the coming years, which would then be a challenge or a drain on the foreign reserves. So the moment you ask importer to register the motor vehicle, registration they don't like to do, because immediately once you register, the value of the vehicle drops down. So they will only import if they have an identified buyer or a potential buyer who is willing to take that vehicle within a period of 90 days. So you've been given a period of 90 days to transfer it to a potential buyer. So this is sort of a rule to see if you can avoid building up unnecessary stocks. Then if you fail to register, there is a penal provision to say that there is a late fee of around 3% on CIF value with a maximum cap of 45% of CIF value. So there'll be no room for importation of vehicles under import permits that has not been granted. And if you import any vehicle in violation of any of the rules that I just mentioned right now, you have to re-export it within 90 days from the date of the bill or the entry of the custic. Okay. So these are the conditions and the taxes and the regulations surrounding the motor vehicle industry. So just to give an idea of the taxes that were collected from motor vehicle industry in 2019, that's just before the crisis and the vehicle market closing down, we collected 130 billion in tax revenue in 2019. 2020, it went down to 44 billion because of the import restrictions. So now this year, we expect to collect 300 billion, which is more than double of what it was in 2019. Right. The next topic I have is on the Tax Appeals Commission. Certain amendments were made to the Tax Appeals Commission Act that I think all taxpayers should be aware of and be cognizant of because some of them are important rules. So the changes that were made, one is to the fee structure, which is not too significant, a minimal increase in the fees that you would have to pay on appealing to the Court of Appeal on a case stated from 1,500 to 10,000. And if you are making an appeal to the Tax Commission from the administrative review, then again, there's an increase of the fee from 2,500 to 15,000. It's not too significant. But following other amendments that sort of have a bit of a importance to the taxpayer. So right now, when a taxpayer is appealing to the Tax Appeals Commission from an administrative review that has been made to the Commissioner General of Inland Revenue, you have two opportunities to make this appeal. One is at the time you receive the decision from the CGIR on the administrative review, then you can appeal to the Tax Appeals Commission. Or you can also appeal to the Tax Appeals Commission within 7 months lapsing since a request for your administrative review was made to the CGIR. Okay, so you can appeal at the time you receive the decision from the CGIR on your administrative review, or within the lapse of 7 months from the time you made the request for the administrative review. Now it has been proposed to take off this option of 7 months. So you can only appeal at the time you receive the decision from the CGIR on your administrative review. There was also a sentence to say that you will not be allowed to make a review, make an appeal to the Tax Appeals Commission if the review has deemed to be disallowed. So I think the thought process there is that, let's say, for instance, when you do make an administrative review to the Commissioner General, and the Commissioner General deems that it is out of time. So let's say the assessment came late, you received it late in the post, and you appeal within 30 days, but nevertheless, you make the administrative review within 30 days, but nevertheless, it is passed from the date of the assessment, it is more than 30 days. The Commissioner General can then say that this administrative review is out of time and reject it. So it appears that even at such a situation, you are not given the chance to appeal to the Tax Appeals Commission. It seems that you can only appeal in this given scenario, which is a bit of a draconian amendment, because that would mean that the taxpayer would then probably have to move to the Court of Appeal under writ jurisdiction or some relief as such, like a writ. Giving the appeal only in this instance is a bit of a, let's say, a disadvantage to the taxpayer. Next, there is a change in the sum that we pay on appeal to the Tax Appeals Commission. So right now, when the appellant makes a appeal to the Tax Appeals Commission under the current law, the appellant may be required, if the Tax Appeals Commission so requests, to make the following payments. So they have to make one of the three following payments. So either they have to provide 10% of the, at the moment, it's only if the Tax Appeals Commission makes this request. So either they have to provide 10% of the sum payable, that is tax and penalty, which is non-refundable, to a special bank account opened and operated by the Commission, or they have to provide a bank guarantee in favor of the Tax Appeals Commission for a sum equivalent to 25% of the sum tax assessed, tax and penalty that is, or you pay in cash 25% of the sum payable of the tax and penalty to a special bank account opened and operated by the Commission. Now, going forward, they propose to take out these two options and only leave you with this option. It's not clear whether they will make it mandatory that you make it make the payment. At the moment, it says it may be upon request. They may make it mandatory, and there, if it is mandatory, you have to make 25% of the sum tax and penalty to a special account opened by the CGIR. So you have to make a payment. No going for bank guarantee. Now, whilst this may be an amendment that can be considered, there are other things that also need to be considered when the legislation comes in. For instance, what happens when if the appellant wins the case, okay, at the Court of Appeal or Supreme Court, whatever level, if they finally win the case and the case is concluded in favor of the appellant, what happens then? Clear provisions have to be there on how this sum is going to either be set off, refunded, or set off against which taxes and how it's going to be set off, because otherwise retrieving this becomes an issue. So those provisions need to be brought in at the time the legislation comes in. Then currently, where you are required to provide a bank guarantee and you do provide it, or if you voluntarily provide it, then the proposal is that those bank guarantees that have been provided will be mandatorily transferred to the CGIR, irrespective of whether the appellant decides to appeal to the Court of Appeal or not. So current bank guarantees that have been provided to the Commission will be transferred to the CGIR. Then there's also a proposal to enable the Tax Appeals Commission to mediate settlements between the Commissioner General and the appellant. And they will bring in the required legal provisions to enable this. Now, there are schools of thoughts on whether this is a good thing or a bad thing. Some say, yes, it might give the Tax Appeals Commission a little bit more power and force in encouraging the CGIR to go in for a settlement where a settlement seems reasonable and expeditious. But at the same time, you don't want the Tax Appeals Commission process to turn into sort of a mediation board kind of process where they're only going in for settlements. That is not the role that the taxpayer expects. From the CGIR to the Tax Appeals Commission, the appeal is made with the hope that at a higher level, the case is appreciated more and analyzed in detail in more through experienced commission members, and therefore will analyze the case and give a judgment that is appropriate. So you don't want that to be and need to go into just a process, but exactly what these are, we'll have to wait and see when the legislation comes in. Then during the appeal hearing process at the Tax Appeals Commission, submission of any evidence that was not previously submitted during the administrative review under the CGIR will not be entertained. Currently, new evidence is sometimes entertained at the Tax Appeals Commission on if the Commission grants approval, but now going forward, it will not be entertained. So you have to be very careful about your appeal process or your administrative review process at the level of the Inland Revenue Department, CGIR level. You have to make sure that you carefully gather and submit all necessary evidence, because you will not have a second chance at the TAC level. There is also a move to say that no new issues can be taken up during the which were not taken up during the assessment or the administrative review process. So which is fair. If no new evidence is allowed to be brought in, then new issues also should be taken up at the tax appeal stage. Then, of course, the term of the office of the members of the Commission has increased from 3 to 5 years on the days of the on appointment. So that concludes my presentation.
Thank you, Madam,
Good.
for your presentation on the Tax Appeal Commission and the Vehicles Import Tax. Now
Sure.
we'll move to Mr. N.R. Gajendran, Senior Partner, Gashman Company, on the implication of tax proposals. Over to you, sir.
Thank you, Gajendra. Thank you, Lakshman, for inviting. Again, in school, you are given a second chance only when you fail an exam. So some of us must have failed the first instance that you have invited us again. Thank you for showing generosity. Now, I will take the issues which is becoming a focal point and also in certain cases highly debatable, and it is raising many matters. First of all, if you take the export of services 15%, Lakshman pointed out a very important point, whether these services, unlike in the case of goods, services, there is no trade and it can be easily retained abroad, and there is no evidence of a trade. So basically, now this is a revenue measure. We are trying to get revenue. The rising from Lakshman's point, whether there will be a double whammy for us. We won't get the revenue as expected, other than few people in the very formal sector, large companies, professionals. Other one is whether the inward remittances which we are crying for will get depleted. Now, the other matter is the IMF in March staff agreement, they imposed 30% tax on export services by companies. The individuals were excluded. There was reason. Before I come to the individual, the companies 30%, and it has been said it with some hard negotiation, the IMF has agreed to bring down the rate from 30 to 15%. IMF agreement says corporate income tax of 30% on exports. They didn't mention about individual taxes. Now, in the budget speech also in page 53, the president says they are going to impose income tax on corporate profit, export services. In the budget speech also, they didn't mention the individuals. But the bill has come with the individuals also being exported. Now, in the past, when governments and people make statements in the budget, we used to take with a pinch of salt because, nothing mentioned might come into law, but there was a great expectation that this government will walk the talk. So that is the first point where they have either overlooked, but deliberately individuals are removed. But this is going to create a far-reaching problem. In the case of an individual, if he resides in Sri Lanka, as per the residence definition, he will be a resident. That means resides means by definition is a person's permanent home. So if the permanent home is in Sri Lanka, if you go out and work also, either employed or services, even for 1 or 2 years, the 183 rule rate won't be applicable. So all these people who are going abroad and working, if they don't get the permanent residency outside, or if they don't get the citizenship, they will be liable to tax on the entire income. True, if there is a double tax treaty, there will be a double tax relief. But many of the Sri Lankans go to territories in the Middle East where there is no corporate income tax or individual income tax on the individuals. So these people will not be liable at 15%, but they can get liable up to 36% because that 15% happens only if you remit the money back. So the people who are remitting back, this time we had about 6 billion remittances. Now, many of these people can be called upon to pay the tax. Whether this is an intended move or it is a complete oversight. This is because of this. If you remember, when Mangala Samaraveera was the finance minister, he brought a provision like this, but he gave an exemption of 15 million rupees. That is at that time $100,000 equivalent. So now this time also, if you don't give $100,000 equivalent or more exemption, all the people will be either silent defaulters or you have to impose on tax. And if you don't impose a tax which is under the law, then there is no meaning of having the law, and then it is all just for the sake of having it. But if there is an assessor takes up the position and wants to impose tax on certain purposes, no one can stop if the law is on his side. So here we'll have to be careful whether you are going to lose the foreign remittance also. And all other thing is, people, if they are conscious of this and if there is doubts whether remittance will start coming down, and even if remittance don't come, if you are resident, if you reside in Sri Lanka, you are going to be liable on your income. If you have a double tax treaty, yes, you might get relief and not be liable. But if you don't have a double tax treaty, then you will be liable on the full income if you don't remit, and 15% if you remit the surpluses back. And the countries have no taxation, individual taxation, you will be liable. So this has to be seriously revisited. Otherwise, there will be unintended consequences. Imagine if the revenue, of course, they can get a lot of revenue. If you with 6.6 billion, if you put even 15% is $100 million. It'd be, sorry, $1 billion. So $1 billion is about 300 billion rupees in taxes you can raise if you want to raise that one. That is on the services of export services. On the vehicle taxes, Charmaine explained in detail the history of the taxation of vehicle. And I think Dumindo also mentioned vehicle taxes, they are expecting to raise 300 billion. But if you go through a little more detail or granular analysis of the vehicle taxes as presented, there are 4 taxes, as Charmaine said. One is custom duty, other one is excise duty, third one is VAT and luxury tax. If you see the custom duty is going to be 30%. That is on value based. So we are going to import about up to $1 billion or $1.2 billion. We'll take the higher side of 1.2 billion, that we are going for the full hog of it, and we are going to collect the taxes as proposed. Custom duty will be about 110 billion rupees, 30% on about 360 billion rupees, 390 billion rupees. Then if you see the excise duty, in the detail analysis, what they are saying is the total excise duty for this year is going to be 231 billion rupees. 231 billion rupees. Increment is about 171 billion. Increment is 170. So if you take the full amount, excise duty will get 230. VAT you will, custom duty will get 110. VAT will be on this 18%. On 390%, 10% you had that, it will be about 70 billion. So the total value will get on, and luxury tax is budgeted at 10 billion total. Luxury tax is, so 10 billion, excise custom duty is 110, VAT is 70 and excise duty 230, total is about 420 billion. But the incremental tax is, luxury tax has been, there was some luxury tax last year also, 24. I was surprised to see that number. Even custom duty has been there last year, 58 billion rupees. So custom duty and excise duty, incremental value about 358 billion. That is almost the number what Durminder was saying, 3 billion. That means even if you go the full log of it, you might not going to get 358 billion, 350 billion. The incremental revenue is going to be 900 billion. This is the main revenue collection. So if it is 900 billion means this is 300 billion, the balance has to get from the 600 billion from the other sources. That is so, this is another matter. Otherwise, some proponents are saying that you might have another budget, interim budget before the, I heard one of the former finance deputy minister saying that in the media that if you don't reach this before November 26 budget, there has to be another budget if there is a revenue shortfall, if you can't reach. We don't want another budget, of course, for sure. And also on this, Charman dealt with the Tax Appeals Commission. There are three matters. One is this 25%, it's the way it's drafted, you have to pay mandatory. Now, this government is one who has been speaking so much of the people's rights. One of the basic taxpayer right is the right to dissent and the right of appeal. Now, if it is a right of appeal, it's fair you have been assessed by an institution where you want to be heard. So, if you are unable to pay the 25%, your right to appeal is denied. That is not at all good for any governance. It's not at all good for any business. I mean, no one will do business if you have no ability to right to appeal. And in practice, people in practice will know, professionals will know, Department of Inland Revenue, when it comes to a position of issuing assessment, they end up with, unless you are going to take what they are going to say, they might end up with excessive assessment, arbitrary assessment, capricious assessment. There have been instances that I brought to my attention where the 25% can be more than the company's revenue. Right? So there is no way that person can appeal. So the right to appeal cannot be denied. Even there are court cases in India where the similar clauses have been there. The courts have had no way you can right to interfere with the appeal. You have to be heard even if you can't pay the condition of money that has to be paid. So the other one point is also question of evidence cannot be raised before the Tax Appeals Commission. We must understand these appellate procedures is to seek justice and fairness for the taxpayer who is being affected or aggrieved by the assessment. Now, there are maybe Tax Appeals Commission is the last port of call to establish any facts. Because in the Court of Appeal, you can't establish, or Supreme Court, no facts can be established. So you have to establish all facts before here. And in practice, when the revenue says, even they are at the hearings, they may say in their arguments, may say so many so many matters may be brought on. For that, we may have to give evidence to say that is not the way it is. So if it is, this point was not raised, the revenue has not been denied of raising that point, but they can raise the point, but the taxpayer will not be able to give the evidence to counter the revenue's submissions. The third point there is the questions of law cannot be raised if it has not been raised before the Commissioner General in the appeal or the administrative process. Now, the questions of law, it is a well-settled matter. Questions of law can be raised in any stage of the proceedings, even in a court of law, Court of Appeal or Supreme Court. A fresh question of law can be raised because that goes into the deep root of the matter. So this is another matter. So I think the professionals and the firms and these 2 points, even Lakshman, your institute may have to take notice of it because it's going to be affecting the taxpayers. And also it will be end up anti-business. And how can you encourage investments in an environment like this? Then the other one is on this, which we have not touched upon, is because this interest, I think Atula mentioned, 10% withholding tax on interest income. Even direction mechanism, I would say, may not be working because it will take time. But if you want to stop the refunds happening, there must be a self-declaration mechanism, which was there even before. So there is no way without a self-declaration system. If you see withholding taxes revenue, withholding taxes by nature is not an additional source of revenue. If you see the details of the revenue line, 230 billion is going to be collected from withholding taxes. That means I mean, straight off undue enrichment, or you are not, and because you are not going, you are going to collect taxes and not pay. There is also the presumption that taxpayers are expected to be compliant, because the withholding tax, one reason is being raised from 5 to 10% because the taxpayers are not compliant. Because the taxpayers are not complying, you are raising the withholding taxes. And then the people who are compliant are going to be affected. If a person is at 30%, 36%, 5 to 10%, he might not file the returns. I mean, he'll be okay with that. But if a person even has a deposit about 50 or 60 million rupees, even at 7%, 8% interest rate, you might still end up with a refund, which can be a sizable portion for the individual taxpayer. On the question of tourism, how many minutes I have, Gajendra?
Gaji, I
On the
think we
question.
may have to cut short because of the almost
Right. Okay.
near the
Then
time for the
I will stop here. Thanks.
Thank you, sir. And we'll quickly move to the question and answer session. To start with, may I invite Senior Professor Kennedy Gunawardena, Head of Department of Accountancy, University of Sri Jayawardenepura, and Council Member of CMA Sri Lanka, to briefly talk about the impact on digital education and digital business. Over to you, sir.
Thank you, Mr. Gajendra. Thank you very much. Now, digital education or digital businesses, whatever, especially come back to the digital education. Now, this online e-learning, Zoom teaching, and everything coming under the digital education umbrella. Digital education umbrella is quite a big one. The only issue is there are a lot of organization, even universities. We prefer to go to the digital education, or we would like to go to the teaching, especially in the digital way. But the one angle, the students' point of view, they're not such a interest, especially education point of view, and the quality is going down, and they are looking for a certain shortcuts. Now, those are the quite big issues we are facing in digital education is concerned. But the country, like, in European countries or in Western world, the countries are quite big, and they have high distance. This digital education is very successful. The local scenarios are concerned, there are many issues, especially our students, they don't have a digital devices. Those are also the computers, laptops, and other devices are quite expensive. There are no tax sessions or tax exemptions or activities for those items. And in the other one is internet connectivity. That is also fairly okay in the town areas, but when you go to the far away, that connectivity also very low. And all these things are concerned, I think, for educations are concerned, I think we have to provide it more tax exemptions, especially these devices and computers and some other kind of things are concerned. That means we have to maintain the infrastructure first, and easily students can study and go ahead. And e-businesses are concerned, I think this particular government, they have initiated one particular thing like digital ID card. I think that's starting from the long time back as well, but now they are going to fast, and they're going to try to do quicker. But in digital identification, it's quite a good movement. I suppose it's quite good, but the only thing is that is okay still for the e-commerce is concerned. Under e-business, e-commerce also part of that. E-commerce means doing a business electronically or doing a business, from one angle to another angle. That is what e-business. E-commerce. For that, I think collecting a tax and all kind of recording things are there. The digital ID is fine, but it's still the same connectivity issues, devices issues, and the computer, even mobile phone, they are quite expensive, and the people have a little bit lacking of trust. I think recently you have seen that there are many scams going on with computer and apps and kind of a things. That is also the trust is another question mark. But we have to prepare, anyway, the starting point, that is fine, but to make a rapid development, especially in the the field of ICT, I think we have to work hard. I think we have to go more and more. For that, I think taxation and other kind of things are very, very helpful to the companies who are into this field. But in the other one thing I have seen that especially this digital platform, they are charging some kind of tax, like people who are doing businesses like Uber and Pick-me's and all. I think people are get used to do those places, those platforms nowadays. I think there is a tax, not exemption. I think tax charges is there. I think the Gajendra, you know very well about that. I don't know whether that amount is going for a customer or a company. I think those are some kind of at the moment. I think what I feel for a digital education, digital business, if you want to move it faster or if you want to make it more valuable to the people and popular among popularity for the among the people, I think we have to do some encourage. We have to encourage businesses rather than discouraging. That's my opening remark, Gajendra.
Thank you, Senior Professor. Now, quickly we'll move to Senior Professor Butti Parabe from the Faculty of Agriculture, University of Peradeniya. He will speak about the agriculture, paddy rice, yield, cost of production, or pricing. Over to you, sir.
Thank you very much, and thank you very much, Professor Vatavan, for inviting me, and then the CMA for getting me on board here. Very quickly, this budget came at a situation where agriculture once again has become talk of the town. Budget has looked at the overall cost structures and, of course, income earnings, the taxation with respect to those people who earn lots of profits naturally. But one thing that is important, out of the 2,208 billion rupees that have been allocated to Ministry of Agriculture, Livestock, Lands, and Irrigation, because it's a combination of ministries right now, about 35 billion rupees have been allocated for year 2025. To be given as subsidized, to be given in terms of subsidizing fertilizer for paddy cultivation. So that we should never forget that it's also will be at the cost of taxpayers' money when it comes to these overall subsidies that are being given. That's something that encourages agriculture on one hand, but of course that brings in a lot of burden to an already economically deprived country, economically deprived economy like ours at this particular moment. But I also see a lot of good things coming in from the budget with respect to agriculture, trying to lift the status of the small and medium enterprises, bringing in youth into agriculture, trying to show them more of a future with respect to agriculture and bringing in the ideas with respect to entrepreneurship. But one thing we should never forget is that if you are to develop agriculture, is the productivity and production what matters. Both matters at the ground level. And mechanization and modernization will play a very important and crucial role if we are to bring in the young entrepreneurs into business, into agriculture, making it an agribusiness as we have seen it up to now. But in doing so, if you try to tax the agricultural machinery and its spare parts heavily, then the overall objectives will not be met. That's something that the government of Sri Lanka will have to look at. And then coming back to the present day scenario with respect to paddy prices and rice prices, something I also could not understand how exactly the prices have been fixed for paddy. We all know that Nadu rice, which is mostly consumed rice, have been, the government has fixed a price at 120 rupees per kilogram of paddy purchased by the Paddy Marketing Board. In the meantime, through a gazette, the prices of rice being fixed at 130 rupees, 230 rupees a kilogram. I mean, we don't need to do any calculations heavily. If the government of Sri Lanka can look at the information published by the Hekla Kobbakadu Agrarian Research and Training Center, which gives weekly information about actual market prices. And when you try to compare it with the paddy purchasing prices, you can definitely see that the conversion from paddy to rice in terms of rupees is twice the price of paddy. And you can generally see that, but it has been overlooked as I see it, and I foresee a lot of problems in the case of rice markets in the future, where the consumers, the government, the taxpayers will have to look after the interest of these 22 million people when they try to bring rice prices down while fixing paddy prices at a relatively high amount. But of course, it's sure The farmers will get the benefit out of it, but the consumers will not get the benefit if the rice prices been at least gazetted once again, be re-looked at it. I don't agree, Professor Vatavan, at all on when you say in an open economy to fix prices, but I'm looking at the current scenario. If the market forces are allowed to play its role, I'm sure all these issues can be sorted out very easily. But we are in a situation now, government is into this price fixing mechanism once again, so that we will have to look at the producer and the consumer end. But giving a higher price to the paddy producer and selling rice at a lower price to a consumer is not going to match. It's not going to work unless another subsidy comes in, or government will have to revisit once again to increase the price of rice in the market at least by 10 rupees in order to make sure paddy prices and rice prices will have this conversion ratio of double the price of paddy. That's the way it's going to go ahead as I see it right now. All in all, when I look at the budget and its taxation structure, I heard a lot of information about the export services being taxed on a given level, and also this digital platform service taxes. I did not understand it very well, I must tell you, but then still, I also have to learn about it to see if you are moving heavily on these digital platforms, bringing in agriculture also into picture, having a taxation component to it will definitely add more burden to the system as far as I see it. So allow me to stop at this particular stage. Once again, paddy will continue to be an issue with respect to rice prices also in the forthcoming future. If we are not going to go have a revisit to that, have a relook at it, and come up with more justifiable conversions, or all in all, we just leave it, make sure that the total coordination and facilitation done by the government of Sri Lanka. Government will not try to do business, but to make sure be the facilitator, be the regulator of the overall market mechanism. That will be the way forward when I look at it all in all. Thank you very much for giving me this opportunity.
Thank you, Senior Professor. Next, we will listen about the digital services from Mr. Perin Banayam, CEO of Informate and the past chairman of Celescom. Over to you, sir.
Thank you very much indeed. And thank you, Professor, and thank you, CMA, for the invitation. The priority for the IT BPM industry was stability, right? Keeping the lights on, ensuring that we continue on our path to recovery. And in that respect, compliance with IMF regulations and with their recommendation was an important one. It was very important for the industry that we continue on the path of recovery, that we demonstrate stability to all of our international clients and partners, and that we continue on the path of recovery. There were maybe initial fears that the new government and with different ideology, that there will be drastic changes which will impact confidence. We can't afford another 2022. We have with difficulty started to re-establish and rebuild confidence. So in that respect, we were happy to see that anything reckless was avoided, that we're keeping on the path of recovery, keeping to the IMF stipulations. So in that respect, I think that was the biggest positive and the comfort factor for us. Importantly, exports were exempt from income tax. Now, there will be taxes on export of services as well, which impacts the IT BPM industry. The amount proposed was 15%. Originally, I understand the recommendations were 30%, but there was recommendations made by the industry and several stakeholders that this would result in driving away companies to other destinations. And IT BPM players, there is no capex or there is no factories or physical assets. It's very easy for someone to get up and go and start working in a different geography. So we made strong representation on that. And if it went to 30%, we would be the highest in the region. For instance, Singapore is at 17%, and Vietnam and several other competing destinations are much more effective in terms of tax. And that would have been a significant impact that would have driven away a lot of our investors and coming. So as at now with 15%, I think that's reasonable. We all need to be fair. We need to understand that the government also has priorities. Whether it will lead, as some of the other speakers were saying, to a net benefit versus the advantage that we have as a zero tax destination is remains to be seen. whether the amount that the government will collect in revenue will compensate for the new revenue and the potential new revenue that we were able to get remains to be seen. Now, there's an important factor here, the port city regulations. So some of the companies who are looking at setting up in port city, and port city of course offers tax exemptions for a 25-year period. Then there was the important introduction of VAT on digital services. Now, the intent of this was to bring about a level playing field. Now, if there is a system integrator Sri Lankan company, if there is, for instance, a Pick Me versus Uber situation, you had anomaly, and that's something that Sri Lankan companies raised, that if you are a local company registered here, you will be then subject to VAT. But if you are operating internationally, then you are not subject to VAT. So the intent was to bring about a level playing field. So to that extent, it will encourage the Sri Lanka-based providers through equality. Now, whether this will result in an increase in the cost of licenses, for instance, Microsoft licenses, Office licenses, things like payouts to Facebook, LinkedIn, and how those sums would be collected and administered, and whether the net cost for students, for individuals, how that will be impacted remains to be seen. The other positive is the government has reiterated the vision that the industry had for $5 billion exports. So it's very good to see the faith in the industry and the importance placed by the president and his team on this industry. There are many who feel that this target has been a long-held one and that we have not really got close enough to achieving this. I, of course, feel, India's industry is over $200 billion. Philippines is over $30 billion. We must aspire high, right? So I feel that it's good to have this target. We must aspire high. We are currently probably close to about $2 billion. We must think big now, right? Like tourism. And there's also been an allocation of funding for industry promotion. We have a brilliant brand called IOI, Island of Ingenuity. We have not done much with that in terms of promoting the country as an IT-BPM destination. Very good to see several of my colleagues from the industry right now. They are in India at the NASSCOM summit. Dr. Hans is also there. So these are the sort of industry promotion that we need to have that will shine the light, shine the spotlight, get visibility, international visibility for Sri Lanka's IT BPM industry. We have some of the best talent in the world. Unfortunately, we are
I think there's some disturbance.
economy.
Yeah, now is
Yes.
yeah.
Sorry,
There's
Professor.
some problem. Yeah, there's some problem. Yeah, I think your voice was not heard, but you can continue. Yeah.
Okay. And also towards education. I think there is a strong allocation towards education, which the industry supports. So let me pause it there. Overall, I think there are a lot of positives, and the biggest being stability and continuing on the path to recovery. Thank you.
Thank you, sir. Next, we will quickly move to Mr. Saktivel, partner of Principal Tax Service at ENY, who will speak about the taxation applicable to the SME sector.
Thank you, Gajendra. So good afternoon, everyone. It's a pleasure to be here today to discuss on the SME sector tax. And so in the next few minutes, I will break down on the key tax impact to SMEs. So let me start with income tax. So the income tax, as you all know, there is the tax rates are same for whether you are SME or otherwise, because there is no any relief based on your turnover or your taxable income. So currently the 30% is applicable. But in terms of exemptions, the export of service exemptions is applicable for SMEs, but that is now is going to be taxed at a reduced rate of 15% going forward. In addition to the relief, there is a tax holiday. Although there is no holiday, the tax concessions were given in the form of a deduction for your investments. So if you invest in a new business or expansion, your entire investment, you can get a deduction for tax, in computing the tax profit. That is, in certain cases, it can be a double deduction in the form of what is called an enhanced capital allowance. So this is applicable for new businesses and expansion by BOI entities, but the limit set at the moment is 3 million USD. It's roughly about 1 billion. So that is why maybe the SMEs may not be able to achieve these limitations, but it was expected there will be a concession for enhanced capital allowance for SMEs also in this budget, but we didn't see any development in this area. So moving on to other tax changes from primarily on VAT. As you all know, the VAT threshold, the VAT registration threshold is lowered from last year to 15 million for VAT and SSCL. So if your turnover exceeds 15 million for a month or quarter, you will become liable and you have an obligation to register. So those who are below 15 million, you had an option to register. It's an optional registration for VAT. But as for the recent VAT bill that was presented to Parliament, that is issued last week, we know that there will be a mandatory VAT registration, even if your turnover is below the threshold. If you are engaged in export or import of goods for commercial purpose, irrespective of your registration threshold, now you have a mandatory obligation to register for VAT upon the enactment of this amendment. So that will bring all the SMEs into the VAT net. So of course, you will be able to claim input for the VAT paid at imports, but then if you are in the business, the competition, there may be a different scenarios when you are facing a competitive advantage over the non-VAT registered person. Because if you are engaged in import, irrespective of your registration threshold, now you are compelled to register for VAT. Additionally, with the introduction of the digital aspect, so now it is proposed to file VAT returns with effect from July onwards. It will be mandated to file electronic VAT returns. So that will also put an additional obligation, because as you all know that the recent budget also, it was proposed that there will be a point of sale system will be introduced, so that you will have to have a point of sale machines for those who are VAT registered. So if SMEs, even if your threshold is below, now you are compelled to register and you are compelled to have this the system in place to capture your sales. So this may require the required IT or the software changes in your businesses. Even if you are small, now you are required to come into this digital obligation. So the digital filing will be implemented from 1st July as per the bill. So there are other key changes. Of course, the SWAT changes. The SWAT is proposed now to be removed from 1st October. So those who are in the system currently, SMEs may also be there as a supplier, as an RIS, and you may be enjoying certain reliefs at import point as a deferment. So all these deferments are also expected to be removed from 1st April. So that may result in a refund situation for you in case if you are a zero-rated supplier. So the refunds will be managed through, as mentioned earlier, it's a risk-based refund system that is also expected to be implemented from 1st October. And the eligibility criteria is specified those who are eligible exporters, that is more than 50% of your supplies are more than 50% is from zero rated in your preceding year, then you will be eligible to qualify for this scheme under risk-based refund scheme. The procedure and the timelines are expected to be issued by a gazette order, but the refund is expected to be released within 45 days from the time of filing. So let me stop at that point and leave for the other panelists to present, and thank you, and look forward to any questions in the later on.
Yeah, thank you. Thank you, Shaktivel. Now, quickly, I will move to Ms. Radhani, Associate Director, Tax and Regulatory, KPMG Sri Lanka, to speak about the key areas of taxation in the budget. Over to you, madam.
Thank you, CMA. Thank you, Professor, for the opportunity given. I think we've spoken extensively on what are the taxes and how the budget has come in forward by giving reliefs or maybe imposing new taxes or re-emphasizing on what the president mentioned in his 18th December speech. So I will not go into details because we have already discussed in detail. Just to flag up few things. One thing on this export revenue, I think in the budget speech also the president said that he wants to increase the export revenue for 19 billion, USD 19 billion. But with that, the policies, the tax policies, the introduction of a 15% rate on the export of services, and also the removal of SVAT system, are these two contradicting? It's something we will have to look forward as to how this will affect the government's vision of aiming at a export revenue of 19 billion. So that is something we need to think about. And also, I think Mr. Gajendran spoke extensively on these interest, WHT, or rather advanced income tax, AIT on interest. So there is another point also which I would like to add when it comes to claiming withholding tax credits, or rather AIT credits. There is always, we see there are a lot of conflicts between the taxpayers and the department, because though the taxpayer has the WHT credit or the certificate with them, the department, because this amount is not reflected, being not reflected in the system, they deny the WHT credit. So with the increase of the WHT, or rather AIT rate, to 10%, and if the department is still going to deny WHT or rather AIT credit, how will that impact the taxpayer or the taxpayers' confidence in the system is something we need to sort out. So yes, WHT interest or the AIT rate has been increased, but can the department accept the WHT certificates and provide the WHT credit is something which we will have to resolve in coming days, or rather coming years, when we file the withholding tax return. And also on this VAT on digital services, the law, we have the VAT bill, so there's been details provided, and also Commissioner General is also empowered to prescribe in the manner how the payment has to be made. So we will have to wait and see how these laws will be passed in the parliament, whether these will be passed as it is or whether there will be some committee stage amendments coming in. We will have to look forward. Yes, over to you, Gajendra.
Thank you, madam. Professor, do you want to take one or two?
We'll go for another round. Let the panelists start another round.
Oh. So quickly, if you can, each panelist start with for a minute or two. We'll start with Mr. Perimbanaya.
Sure. Thank you very much. So coming to the challenges, I spoke of the positive aspects. Coming to the challenges is brain drain, right? I think that's an area that not only our industry, but a lot of our industries are continuing to face. Some of our best professionals, particularly we are finding in the middle management. Now, these are the people who are able to most contribute, who have been trained, who can train younger people, are migrating to greener pastures, and that is a concern. Of course, there is new talent pools being developed and there are strategies, but there is no going away that it does hurt the industry. So some of the things that we have asked for is widening the slabs, and we are pleased to see that there has been some attempt towards that. The tax rates, we understand it's not possible because we still are coming out of a crisis situation, but going forward we would recommend that we continue to look at widening the slabs, because very quickly people get into the top tax slab, and 36% is high. The second thing is we've asked for relief. Now, if you look at the people migrating, some of the key things they are looking at education for their children, and the other thing is ownership of things like housing and vehicles. Right? So expenditure relief is something that the government should consider in upcoming years, so that they have relief for things like education, their children's education, and this is after all the knowledge industry. Right? So that is something that should be encouraged within the framework of the IMF proposals. So those are some areas that are yet to be addressed. We would encourage continued investment in branding this industry and continued investment in new technologies like AI and disseminating that knowledge widely. We have an opportunity to leapfrog in the new AI environment. Under the previous government, AI clubs there was a pilot that was started in 50 schools. We must continue those initiatives so that we build a highly literate, highly knowledgeable, and cutting edge education system. Thank you.
Thank you. Senior Professor Butimarabe, over to you.
Thank you very much for the opportunity once again. Let me build upon what I said at the very beginning, while acknowledging that there are a lot of positives in the case of the budget that has been proposed. I think we have to also alarm in certain situations about the future of agriculture and of course, the foreign exchange drain that might take place because of lack of shortage of one of the most important commodity, our main staple, that is rice. I just want to add to what I said earlier. We know that the government took a valiant effort in trying to fix the price, though I'm not for price fixing and all, as I told you, but in economic situation, in economic crisis, this one way to move ahead. Government has allocated about 5 billion rupees to purchase paddy from the Maha-season harvest that we have. But of course, up until yesterday, they have only purchased about 21 metric tons out of a large quantity that they were expecting to procure from the farming community. Now, this is not only because the farming community is not willing to sell it at a price where the Paddy Marketing Board would like to purchase or procure, not only because the external parties are purchasing at a higher price. One of the crucial things that we all have to understand is that this Maha-season yield that we have got is the lowest when you compare to last 6 years Maha-seasons, excluding 2022, which was a disastrous year due to bad policy making. So when you have low paddy productivity in the market, just this mainly because 10% of the extent that we cultivated got lost due to heavy rainfall in November and December last year, and also heavy rainfall that occurred in January this year. So we have to take those things into account, and government may have to spend some amount of money for importing rice to feed our nation towards the latter part of this year. So this kind of budgeting will have to take place considering the climate change scenarios, considering the productivity and overall production that has taken place right now with respect to paddy and so on. And mind you, when a low production is there, even Paddy Marketing Board is trying to procure paddy and keeping them in store will also create an artificial kind of shortage in the market system. So all those will have to be taken into account when you look at upgrading, updating, or doing necessary amendments to the national budget with respect to agriculture. Thank you very much.
Thank you, Professor.
Just one question I want to ask Professor Buddhimarebe.
Yeah.
Now, if you importing rice, actually without the duty, the price of rice is cheaper than in Sri Lanka. How do you think that we can adjust ourselves to maybe come up to that level of producing at maybe a lower cost?
Yeah, one of the way, Professor Vattamalli, that's a very important question to improve the productivity. I mean, we had a very high productivity. For example, in 2020 and 2021, on an annual basis, we produced more than 5 million metric tons of paddy, which came down drastically and dropped to 34% less in 2022 because of poor government decisions. Now we are bouncing back. In such a scenario, there's a lot of assistance will have to be given to make sure the productivity, or in other words, yield per unit area, can come to a higher level. I mean, even by using the same high amounts of inputs or spending a lot with respect to the cost components of production. The second component is to make sure the technologies that are there, which we can use them at a lower cost, but still have a high productivity. But all those things will have to match together. If you don't look at in the long run, Professor Vattavala, looking at both these ends, will fail in our exercise. So my point, my plea to the government of Sri Lanka is that that's what I earlier also said. When the technology is being brought in, if technology, especially for agriculture, as I'm speaking on behalf of agriculture, is being taxed heavily, that's not going to serve the purpose. So there will be certain concessions that we have to give, given with long-term aims and goals in order to improve productivity and so on, to feed the nation, more importantly, at a lower cost. And remember, we have to look out the interest of both producer and the consumer, and also the chain of key players between those two end components. If you don't look at those people together, look at as a food system rather than looking at a component, we will fail in our work. So let's look at this whole food system, Professor Vatavana. Government of Sri Lanka will have to take each player into consideration, because if one component get blocked or get moved out from the system, then the whole chain is broken. We should never forget that. And that's a proposition that I have always with respect to agriculture development in this country. Thank you very much.
Thank you.
Thank you.
Ms. Radhani.
Yes, thank you, Mr. Gajendran again. So, just a quick one. I think we have a VAT bill and an inland revenue bill which has been introduced, but there are certain proposals which were proposed in the budget, have not included in both this inland revenue and the VAT bill. So, something like the increase of the CGT rate for individuals and partnerships, and also the changes to the lodgement of the statement of estimated tax payable, and also the computation methodology for installment payments. So those changes will have to be brought into the law. So we are not too sure how will that be brought in, whether this will be brought in via a committee stage amendment, or maybe a new bill will be introduced later during the year, is something we will have to watch. So same applies to VAT also. So there was certain exemption on these port city companies. Whether these will be included in the committee stage amendment, or another VAT bill is expected, is something we will have to watch out for. And also the changes for SSCL, the Social Security Contribution Levy, that also will have to be brought into the law. So we are expecting the bill to be published anytime sooner. So we will have to wait and see how these laws will be enacted in the coming days. Yes, over to you.
Thank you. Senior Professor Kennedy Gunawardena.
Yes, thank you. Thank you, Gajendra. Now, still, I feel that infrastructure part is, I think we are not up to the standard, especially the digital education infrastructure, the very, very important. The most of the areas, like no problem about the Colombo and main cities. Main cities anyway, smart boards also available. But when you go little bit away from the main cities, very few schools having at least the smart board and the English language and the development of the education infrastructure. And those are the things I think we really want to make a more attention or encourage in. I think government want to look at in that part. Otherwise, we are a little far from the other country as well. Digital education, if you want to increase more, as well as the digital businesses also, I think everybody who are working with the digital, that is the only way we have to increase the skills of the employees, in skills of the students, everybody. That is what my final remark. Thank you very much.
Thank you.
Professor Kennedy, can I ask a question?
Sure,
Now one of the reasons that the students after the A-level are leaving the country is because of the delay in the entry to the universities. Do you think that this can be caught up, and then where they can straight away go to universities after the A-level?
Yes, sir. Now the thing is like that. Now, even in our education system right now in A level, there are many streams like technology scheme and something like the commerce, and that's the old one. But many students right now, the commerce students, especially who are studying in accounting, they move to the technology stream, because technology now, the very few people who are doing accounting, because accounting still we are doing manual. We are not bring the at least Excel calculation now in every companies, all accountings are done by the Excel format. We are not teaching even Excel also in the school syllabus, especially for accounting, teaching in accounting. That's what I said. Now, say, if you will do such a training, our teachers, training our students, and the infrastructure development, giving lot of softwares for all A-level, I think even science students also, I think new technology we want to brought to them. Then definitely our students are waiting here, studying here, because they are looking for another country because they think the education is standard over there. Their quality. They don't feel our education, even the university education is fine. I'm talking about that university students only for 3 years with us, but school students for 13 years. We want to improve the entire education system with IT. Otherwise, I don't think we can increase the digital education, in the up to the world standard level.
Professor Buddhi, do you have your comments on that? We can get the comments about this. Trying to catch up the period you are going to stay at home,
Yeah, thank you very much, Professor Vatavala. That's an issue, of course. We are in a system, you have to understand that the Department of Examinations is the entity that is responsible to hold the national level examinations. And the University Grants Commission use the results of that national level examination in order to make sure admission procedures take place according to the government policies. So these are two different entities. The Department of Examination is not bothered, for example, whether a student enter a university or not. Their job is to release the results. Now, once the results are released, when the UGC, University Grant Commission, has access to those things, this is where the delays start coming up. I think because there's a recorrection procedure, there are appeals procedures that are going on. So I think the UGC has made every effort in the very recent past to cut it short, the time period of waiting time from the time the results are released. I mean, if they can accelerate this process further, for example, as soon as the first set of results are released, they can definitely prepare the university entrance list based on the past information and the available vacancies without waiting to release the final results until the recorrection results come in and being released by the Department of Examination. I think the time period of waiting can be cut short at least by 1 month when I look at the overall process, so that the students will get an opportunity to enter the government-sponsored university system little earlier. But this collaboration and communication between the Department of Examination and the University Grants Commission is taking place. I do understand, but we have to speed up certain activities that take place even within the University Grant Commission to make sure the results are released quickly. Results in the sense university admission results, not the examination results. So this is the point that I think we can cut short the time period of waiting. Thank you very much.
Thank you.
Mr. Saktivel.
Yeah, let me touch on a few questions relating to, I think, the digital VAT, the VAT on digital services. So it is, although it is now in the bill, the VAT bill. So the details of it is a chargeable to VAT at 18% only by services provided by non-resident through electronic platforms. So the terms are defined. So the electronic platforms, basically the web and mobile platform, if applications, any services provided by a non-resident to any person in Sri Lanka through web or mobile application, there will be a VAT of 18% on the service provider. So the mechanism to tax them, register them, because they are not here in Sri Lanka, the mechanisms and the procedure to pay taxes by them are expected to be issued by a gazette order. So the details, procedures are not yet published, but the chargeability sections are introduced now into the VAT Act. So this is similar to other countries. They have implemented what is called a digital service tax, DST. So their coverage where they have included not only limited to kind of, Uber or operation, but it is extended to cover the Facebook, or even Netflix and other digital service providers. But here we do not have at this point a list of the services, but the definitions of electronic platform is defined. So the procedure will bring us additional aspect of this, the digital service tax. So, and next on the SWAT, yes, the SWAT, it was earlier proposed to be continued in December, the president announced, and then the budget, it was announced that it will be discontinued. But now the bill only just has provided an indicative date that is from 1st of October, it will be discontinued. And a new VAT refund system will be introduced from 1st October. So the discontinuation is there in the bill, and of course, subsequent changes of the discontinuation of the SWAT, because there were certain reliefs given at import point if you are already a registered person for SWAT. So those reliefs are also now amended so that you may not be able to get a deferment for your imports if you are an SWAT supplier. Earlier, you were able to defer at import point if you are a supplier to an exporter. So for certain cases, you enjoy that relief. So those reliefs are removed, expected to be removed as per the bill from 1st of April. So it's not from 1st of October. It's expected to be removed from 1st of April. So you might have a refund generating from 1st April, but you will have the new system will to refund. It will be operative from 1st of October.
Thank
Yes,
you.
Gajendra.
Yeah, now I would like to invite Mr.
Can you just take a few questions if you, I think there were a large number of questions. Have you got those? Or?
So most of the question is on the digital VAT, and other one is on the 15% tax on the foreign income.
Right. So that's covered down. Oh,
Yes.
okay.
Most of
right.
the questions I answered. I
Person-
answered to most of the questions.
Right.
Online I
Okay.
answered.
So now let me invite Vice President of CMA Sri Lanka, Mr. H.M. Henaka Bandara, to do the concluding remarks. Over to you, sir.
Right. Thank you again, ladies and gentlemen. Let me make few general comments very briefly. I believe that the government had two constraints in formulating the budget. One is that necessity to comply with the benchmark imposed by the IMF. I think Mr. Ulangam also mentioned on that point. And the other is the statutory requirement of maintaining macroeconomic benchmarks imposed by the Economic Transaction Act, which will be treated as a violation of law in the event if the government does not comply with it. So these are the two constraints that the government had in formulating the budget. So it is my view that there is a serious defect in the budgetary process. Always, budget is evaluated at the time of presentation, and mostly capital and revenue expenditure numbers are used to praise the budget. For example, every time when a budget is presented, various organizations are quick to brand it as a development-oriented budget, or people-friendly budget, or maybe even as a welfare budget. So if I give you an example again, when the budget 2024 was presented, certain organizations had praised it as a significant step towards laying a foundation for sustainable growth. But there was no comments by such organization when the capital expenditure program had reduced from 1,700 billion to 817 billion. Had this amount been used as planned, I presume it would have been a deficit in the primary account in 2024, even though they have shown a surplus in the primary account. As they have planned, if they have spent the capital expenditure, definitely there would have been a deficit. More importantly, curtailing of capital expenditure is an unproductive measure since it compromises the country's ability to grow. Therefore, it is essential that the budget should be evaluated not at the beginning, but at the end of the year. more importantly, the parliament, which is the authority on public finances in terms of the constitution, does not have a mechanism to ensure post-analysis of the budget and to assess the impact of budgetary expenditure on the economy. I think a couple of research organizations have also pointed out this matter. Even they have tried to get certain statistical information from the government or the Ministry of Finance and the related ministries, but they were unable to get the statistical information. Therefore, they were not able to really to summarize to what extent they have achieved the budgeted target. I wish to mention that the budget emphasizes the digital economy initiatives, reforms, new legislations, and to maintain policy consistency by retaining the existing tax framework to avoid ad hoc tax measures. But what is important is timely implementation of those reforms, which will create a more favorable environment for private sector investment in key sectors. Budget also focuses on stability, governance, public relief, tackling corruptions, and driving inclusive growth. I think Mr. Ulanga more emphasize on this matter, the government vision driving the inclusive growth during the next couple of years. However, there seems to be no space for the government to provide adequate relief to income tax and VAT payers as promised earlier. Therefore, such relief should wait until they conclude its program, maybe in program with IMF, maybe in 2027. The proposals mentioned in the budget require time-bound implementation and prior consultation to translate the budget's vision into a reality that will be felt by the public. So let me stop at this point and thank you all. Over to you, Gajin.
Yeah, Professor, over to you.
Yeah, let me, I think I thought Mr. Gajendran will thank everyone, but Gaji, you do it or you want me to do it?
You can do it and conclude it, sir.
Okay, right. So anyway, I think when you discuss tax matters, it always takes time. So I'm extremely sorry that we had to overstep the time. But certainly a lot of important matters were taken up because we had very high-profile speakers, starting from Mr. Duminda Hulangamua, who gave the government position. And this, I think, would have been useful to everyone. And then on the other areas of the tax, which is, I think, the most important one on the individual taxation, which you are looking, and also the corporate taxation, which was covered by Mr. Atul Ranavira. I think he has been doing it continuously for us. I must thank him for the great effort he is taking and supporting us in this matter. Then also we had Shaman Tilakaratna, who really spoke on this matter of the vehicles and also the Tax Appeals Commission. And I think the vehicles may be something that have an impact on the economy because immediately the prices will go up, and whether that could result in the other prices going up. It may be something like the depreciation of the currency that we had, whether that will happen, or whether it will bring stability and promote the industries that are there. And as always, Mr. Gajendran has been speaking on the implications and telling us what sort of things will happen in the tax era. So unfortunately, he also had little time to, he wanted to go on for more, but we had to stop midway. And on the panel, I think I must thank the panelists, although the timing we could not do, but I'm sure the rounds that they given to them, they were able to cover all in detail, because I'm very happy that there were two senior professors from the universities. One university which is really more on the business area and how the digital area can go into it. And of course, from the Jayawardhanapura University, and of course, Senior Professor Buddhi Marabe from the Peradeniya University, because I think one area that is covering is this agriculture area. So I think we are also very interested because as management accountants, one of the key areas is the costing. So that's why we are really worried. Of course, market conditions are there, but if we do not know the real cost, if we know the real cost, then we can provide a solution. Like what you said, it may be the yield, the productivity, all these areas, or maybe any other condition. But all the other countries, in fact, I met someone when I was going to Pakistan, and he was seated next to me. He showed me maybe he has taken a photograph on his WhatsApp of all the vegetables that are there. So he told me, you know, these 100 kilograms that you're having, I can buy 1 kilogram with this price in Pakistan. So I think we are in fact looking, and maybe we may have to get some advice from him on this, because these are the real areas where the cost of living is going up. Why our production costs are very high? Because if we are going to be competitive in the world, then this has to happen. So that's a very important area. And of course, Mr. Jehan Perimpanagan, the IT area, that's the growth area that we are having. So there is a fear that maybe the tax might affect them. But I feel the bigger area is that we don't have the sufficient, although they say they have enough people, the technical people. I think we should do this, especially not in the cities, but in the outstations. And I was recently speaking to someone, he said he's having his project in Kurnagal, and he has about 5,000 people who are working there. So if we take this to all the provinces, then there will be real development in the provinces and also the education. So education has to come on this, and that's the growth area we need to really look at. And also I must thank both Radhini and Shaktivel, because the matters they spoke on, especially Shaktivel on the SME, which is also the important one. There is no time to look at it, but certainly it will help, and Radhini on the other matters, which would certainly help us in all these matters. And of course, the final conclusion that was given by Mr. Hennayaka, which really wrapped up the whole summit that we were having on the budget highlights. So once again, let me thank everyone, because really, if you really see, when you have a paid one, and if you want people to come, it's really, the numbers are very much less now. Here we had almost about 750, almost 500 attended online. So you can really see, because we are catering to a market, and this really helps us in getting this done. So let me thank all of you all, and I'm sure that you will support us in the future. And let me thank all the participants for their participating at this, and that this should have helped them. And I know that I must thank Mr. Atul Ranegara for answering all those many of the questions, because I was looking at the questions, there was nothing left at the end. So he must have answered all those. So thank you, and all the very best to all of you.
Thank you all. Thank you.
Very much.
Thank you,
Thank
Mr.
you all. Thank you all.
Thanks. Mhm.
We'll stop it now, sir.
Yeah, we'll stop it.
Yeah.
I'm just trying to get this done. There's a one.
Most of the questions were repeated ones.
Yeah, most of them. No?
Anyway, most of the people are interested on this taxing of foreign services.
Foreign, yeah.
And the withholding tax on interest. Those two are the most important thing.
When you say foreign services, this IT matter also will come in, I think, no?
Yeah, everything is coming. Not only that, but also now suppose I am a retired person, I worked abroad and came back to Sri Lanka for settlement, settled down in Sri Lanka.
Right.
My retirement pension getting from overseas is also liable under this.
It's also liable, is it?
Because now the exemption is there only for the government pension. Now there's an exemption in the third schedule, that is the pension receiving from the government, that is government of Sri Lanka. Now there are so many people, they have come back to Sri Lanka after overseas services. Now their pensions, everything will be liable at the rate of 15%. Anyway, the 15%, the service tax is a killing thing. That might create a lot of issues.
Is it now, when there are foreigners who have come and settled down here, how will, if they're getting certain pensions and money from overseas, how does it affect?
No, everything is liable, no, because no sooner that person becomes a resident of Sri Lanka, tax resident of Sri Lanka,
Then he will have to,
then liable, the world income is liable.
right. Right.
Up to
Okay.
now, this was exempted under that section, service section. Anyway,
Now
we wait and see.
how is that now? Interest also same thing, is it? Foreign funds coming where the interest earned the same. Or is it getting any
No,
exemption?
at present, non-resident people's interest income is liable only for the withholding tax. No sooner you pay, if you pay the withholding tax, there won't be any further tax in Sri Lanka. Now, a lot of, for our children and all, we can transfer our deposit under the names of the children who are living abroad. Then only the withholding tax is there. But that withholding tax also now they are increasing to 10% now. Anyway, 10% is much more better than 36.
But how is it for now? If you earn abroad and you come and deposit it here, then what is the situation?
Then it is normal tax. Normal tax which goes up to 36% because
36%.
interest income, that is the, now suppose that person is receiving this interest after becoming a tax resident. After becoming a tax resident, then the interest income is liable on slab rates, which goes up to 36.
So it's not worthwhile for them to bring the money here then? Does it mean that?
No, even they keep in abroad, as per the law, the interest is liable in Sri Lanka. But they are not declaring, that is the thing.
Right.
Anyway,
Right, okay.
Now, we are discouraging of they are coming back to the country.
Okay, thanks a lot then. We will conclude. Okay, bye.
Yeah, thanks.
How was the art class? Assam game? No. Huh?